Good evening, welcome to Taking Stock. I'm Bruce Whitfield. Did you hear the one about the landlord, the tenant, and the property fund manager who walked into a bar? Well, it was a South African bar and there was nothing in the bar. It's a rubbish punchline, but hey, it gets us started on a very big and important topic, and that is the relationship, the deteriorating relationship between the landlords and their tenants in an environment where tenants have been pushing back against rentals and landlords, desperate to earn revenues, have been working hard to try and compromise. It's been 4 months now and lots of tenants are going bankrupt, and so huge pressure on the South African property sector. Tonight we'll talk to a tenant, we'll talk to a landlord, and we'll talk to a fund manager. Well, up first this evening, Ivor Blumenthal, who is the founder of the South African Tenants Association. Clearly, you needed an association, you needed a representative body, you needed a unified voice in the face of all of this adversity that's come your way in a really short period of time, Ivor.
So, in fact, it was the Department of Trade and Industry that opened the door for the formation of CITA. They did something called the block release for the property sector. And in their own words, they did it because they wanted tenants to come together to organize collectively so that they could sit across the table from organizations like SAPOA, SA Right, South African Shopping Centre Council, and talk specifically about the impact of COVID and what needs to be done to help tenants get through this process. And there are still tenants who to this day are still in lockdown and cannot be opening their business. And the reality is that that never happened. So the block release at least created CITA. It created PIGS on the side of landlords, which is the Property Industry Group. It's not my acronym. And they were supposed to have come together. But the landlords have ever since been resisting the notion that tenants should collect, should associate with one another, and should have the audacity, quite frankly, to sit opposite them on the other side of the table as equal partners. And that's why we created CITA.
The tensions between landlords and tenants have been building for years. There's a disproportionate power relationship. Landlords have simply dictated the terms, and if you didn't like it, you left and somebody else took your place. For the first time, possibly in the history of South African shopping centres, certainly that dynamic may be changing, or not yet.
Absolutely, Bruce. It's changing at different levels. So, for example, you would have heard of the Foschini guys and the Dis-Chem guys, the guys who are doing turnovers, in excess of 50 million, 80 million rand a year, who are getting together and really having their say in those relationships. My guys are the guys who make less than 50 million rand. In fact, the majority of them less than 20 million rand a year turnover. They're really the small guys who are falling below the cracks. They don't have as much weight as the big destination chain stores, but they're critically important to the cash flow of these shopping centers. And, the statement to shopping center owners is ignore these people, aggravate these people, quite frankly, to your detriment.
And we've seen over the years, in times of crisis, our shopping centres get vacated and it creates opportunities for new tenants to move in. One of my best examples of that is Techie Town, which really expanded after the 2008 financial crisis. And that may happen again as people look to expand their businesses. But it's the small guys. It's the guys who employ 5, 10, 15 and 20 people who might have 1, 2 or 10 outlets dotted across malls who don't have the muscle. Have you got them some muscle, finally, some representation in this battle against landlords? Because I think it is a battle.
We haven't got them the muscle yet. We've been going for 3 months. And the reality is it's going to take a lot longer. It's exactly the same fight that the trade unions had to fight for recognition. So for a long time, employers were saying to trade unions, we're not going to deal with you. And trade unions had to go to court. They had to get the law changed. They had to fight for recognition. So we're finding that landlords are actually saying to their tenants, we'll even sweeten the deal, but don't work through CITA. Don't work through a collective organization. They make them sign non-disclosure agreements so that whatever they offer them, they can't talk to their own lawyers about, quite frankly. And they really are a mafia to themselves at the moment. But I anticipate that will change.
The mafia to themselves. I mean, that's a strong statement in an environment where everybody's supposed to be working together, cooperating and getting on. It suggests that the relationships are still incredibly tense.
So on an individual basis, landlords will choose the tenants they really want to go after, they really want to keep bound to their shopping centers, and they'll be extremely sweet to them. But in reality, the rats and mice, the small guys, the guys who come and go, but on average, my people have been in a shopping center between 7 and sometimes even 15 or 20 years. Those are insignificant to landlords, even though they'll say they're significant to them. They're insignificant in the greater scheme of things. And the reality is, I think, my personal feeling is that many landlords and pension funds in this country have learned the Donald Trump trick, which is that if you trade recklessly, if you make a loss, you can carry a tax holiday into 9 years, 10 years, 12 years into the future. And I think that certainly as far as the small tenants are concerned, that's part of what's going on here, reckless trading.
Reckless trading is a very serious allegation as well. How do you, 1, prove it, 2, stop it, 3, take action on it? Or is this simply a negotiating tactic with the landlords to say to them, start playing nice, otherwise we get heavy?
It's not a threat to landlords. It's a case of saying we can do better for you in your shopping center if we engage, if we sit on opposite sides of the table and try to jointly manage your shopping center, participate in how you manage it, but more importantly, as far as our members are concerned, spread and share the risk. And spreading and sharing the risk is the day of charging a fixed rate for rental has to be out of the window, at least until we get to level 1. Give us a percentage of turnover in terms of how you charge the rent. At least that way we know as we get closer to the average of July to December of 2019, my guys will have no excuse but to pay full rentals. But spread the risk and share the risk with my guys if you're interested in your own shopping centers. Now, unfortunately, there are many recalcitrant landlords, and it's because the associations have said to their members, don't play with CITA, don't play the collective game, let's keep our stronghold.
Do you have any government backing? Do you have any state support in this battle? Or is government listening to the plight of the little guy?
Look, the reality is at this moment in time, the DTI are noticeable by their absence. They thought that with doing the block release, they had exhausted their obligation to retail in this country and that the relationship would take care of the problem. It hasn't. We need DTI intervention. We need a small retail tenant ombudsman in this country who can sit and neutrally evaluate whether or not these landlords are playing fair.
Ivor Blumenthal, we'll leave it there. Thank you very much for kicking it off for us this evening on Taking Stock. In a moment, the landlords. So from the tenants in the South African Tenants Association to a whole bunch of landlords for you this evening. The mafia, as Ivor Blumenthal calls them, in a moment. Well, from the angry tenants to one of the landlords. Liberty 2 Degrees is a property owner that, amongst other properties, owns a property in the Midlands, in the KZN Midlands. It owns the Promenade, the Liberty Promenade as well as Sandton City, Nelson Mandela Square in Melrose Arch, some of the country's most prestigious retail property. Ivor Blumenthal says that you guys are all gangsters. You're all part of this mafia. It's his word. He used the word mafia, and you're not working particularly effectively, particularly with small tenants. You're willing to compromise with the big guys, but not the little guys. How do you respond to such an emotive accusation?
Afternoon, Bruce. Thanks for having me. It's a pleasure to talk to you guys about this topic. We are obviously in a period of extreme uncertainty in how we respond to the COVID-19 pandemic in our portfolio and how it has affected us financially and continues to affect us and our tenants. Our overarching approach, though, is to see our tenants as our partners and to find a pragmatic means of stepping forward and joining them on the journey, a difficult journey that we both face as we wait for some recovery.
Jose, I mean, if you listen, Jose, hold on a second, sorry, but as you listen to Ivor Blumenthal, and he talks about the fact that you guys aren't interested in the small tenants. You don't want to meet, for example, he doesn't mention you specifically, but generally large landlords not wanting to meet his organization, CITA. They're too busy focusing on the big guys and looking after the anchor tenants to worry about the little guys, the mom and pop shops, the guys with 5 or 10 outlets spread across the country. They simply feel as if they're not regarded as important by large landlords such as yourselves. Would you concur with that?
I don't concur. Maybe I can give you some of the facts. Over the last 6-month period, in our portfolio, L2D specifically had given 75 million rand worth of discounts to tenants. we only own a third of the effective ownership of the assets in our portfolio. So the collective discount between the owners in our portfolio over the 6-month period to the end of June is around 250 million rand in total that have been given to tenants. Those discounts specifically are weighted towards the smaller tenants and the tenants that are more severely impacted in the portfolio, including restaurant tenants and tenants in the hospitality sector and the SMMEs. We have reached agreement with the larger tenants, I guess, as a grouping much earlier than some of the smaller tenants. The guys who are more severely impacted, there is more uncertainty as to how the recovery will be for them, etc. In restaurants specifically as well, the additional restricted trade that they've got in terms of spacing required within the environments, the alcohol ban that remains in place, there's still a lot of uncertainty. And even though we've provided relief, discounts, etc., deferrals of rentals, those things are not yet enough to convince some of the operators to reactivate their stores.
But here's the problem, because if I'm a small tenant in a big mall, already I feel my relationship with my landlord isn't always the best it could be.
Yes.
And then we have COVID-19. We go into a hard lockdown of 5 weeks. I've had zero revenue. And you come along and say,
yes,
here we go, have a discount. Well, I'm still not making any money. And a lot of these businesses are marginal at best, particularly in an economy which has been descending deeper and deeper into recession for an awfully long time. Is it really enough to expect your smaller tenants to say, why, thank you, sir, very much, sir. Thank you very much for the discount, sir, when they've got no income themselves?
I think it is difficult, but at the same time, landlords also have their bills to pay. Our rates bills, etc., still need to be settled to government, and which is constant engagement with government with little success as yet. But I think our support for the tenants goes beyond just the rental discount for the affected lockdown periods. We are talking to specific tenants that are severely impacted into the balance of the year around commercial support that leads into those periods, and in many cases supports, I guess, getting them back up and trading, providing an environment that people feel comfortable coming into, that it's safe. We've recently received our accreditation from the Safe Malls accreditation body, which is an international body that looks at your COVID compliance and best practices as we see them currently. So our position as landlord is to provide an environment that customers are happy to come to. Yes, our tenants, big and small, have been severely affected by the decrease in footfall over the last 6 months. But currently at our centers, we're up to about 70% of our historical footfall levels. This requires us to look at which tenants we need to support, okay, and what makes the environment inviting, and what convinces people that it's exciting to still come and it's safe, I guess, as the paramount important factor. We're never going to solve everybody's problems in a process such as this. I think what we are doing is our level best. You would have seen our results for the first half of the year. We've been severely impacted from a financial perspective. We've provided what support we can. We are working with tenants in looking at their business plans and their plans for operating going forward in the remainder of the year, and providing further support to the extent that we can.
I mean, nobody wants to go into a mall that looks a bit like a Halloween mask, you know, these Halloween masks, and it looks like missing teeth. And you go into malls, and it's so sad to see your favorite little shop that you used to like buying gifts at, or your favorite little coffee shop, with paper over the windows, because that means failure. That means the business is gone and is gone in perpetuity. Is there not a risk here that 6 months from now, that every second shop is papered over? Or is that simply just a risk that you as landlords have to take? Because if you discount in perpetuity, there's no guarantee that you're going to get those tenants are going to survive anyway. So cut them loose sooner rather than later.
I think as landlord, we'd rather have a tenant than a vacant space. Okay, and commercially through this period, that has been our approach, to partner our tenants and to make sure they can continue trading, provided their business is sustainable. And I think I must point out that even before COVID, a lot of businesses have been affected by the economic environment in South Africa before this. Okay, this has just emphasized some of the issues that we've had before. And I think what a lot of independent and smaller retailers sometimes miss is that there's an interdependency between your tenant mix in an environment that is a mall. Okay, the customer isn't always coming to the small mom and pop store. They're coming into the environment and they're visiting all of the stores and facilities available in that environment. And those things speak to one another. In our portfolio specifically, the key thing remains the catchment area of the property and whether people want to come there. Our vacancies in our retail portfolio are still well below industry averages and well below 5%, even with this environment. we've managed with restaurant closures during COVID to find new restaurant entrepreneurs coming into the portfolio and wanting restaurant space, given the historical performance of the portfolio that we've got. Now, there have been some nuances between how large retail performs versus smaller retail in communities and regional sectors, such as the ones that we own, and there are differences. But those are still largely being affected by restricted movement and restricted trading patterns, and we can't see the full effect thereof yet until all of these are lifted and we return to at least some level of normality.
But it is essentially every business for themselves. You've got shareholders, you've got pension funds that require income from you, and they'll lean on you heavily to ensure that they can get their dividends on a regular basis. You've got tenants on the other side who are saying, give us a break, and somehow you have to find a middling way through this. And in that process, it becomes incredibly emotive because people's livelihoods are massively affected. And you get called things like the mafia. Will you meet with the smaller tenants? Will you meet with those guys to nut this out? Or is it simply a case of you're probably not going to survive anyway, so cut your losses and run while you still can walk?
No, that hasn't been our approach at all. We've got thousands of tenants and leases in our portfolio. We are meeting with all of our tenants to pragmatically discuss a way forward. I can honestly say that our approach has been, in my view, exceptional in terms of providing assistance. The consequence on our shareholders has been felt. Our mid-year distributable earnings is 50% down. I've just come through our mid-year results presentations and discussions with all of the analysts and stakeholders in our business. And although that has been received as best it can, it is a difficult pill to swallow. But with that being said, we don't have a business without tenants. A mall is not inviting if there aren't restaurants, if there aren't entertainment factors, etc. They are essentially places of gathering, which in an environment where you are struggling under a pandemic is difficult to make inviting, but we are trying our level best.
Jose Snyders, thank you very much indeed. He is the Finance Director at Liberty 2 Degrees, the owners, amongst other properties, Sandton City. We'll wrap it all up in just a moment. And on to the final segment of the program this evening, to fund manager and portfolio manager Peter Clark. He joins us from 91 in London, or at least his spare bedroom in London. I suppose London is in some kind of lockdown like South Africa. People are choosing not to go out. There are restrictions on movement. Shopping centres there, similar issues to what we're seeing in South Africa?
Hi, Bruce. Thanks very much for having me. Yes, I think this lockdown has been felt in London like it has been felt anywhere else in the world and indeed in South Africa. So the government's actually trying to stimulate a lot of people going out now. So they've got this scheme this month, Eat Out to Help Out, where you get discount vouchers to go and eat in restaurants, but still consumers aren't out back in force yet like they have been, and the consumer experience just isn't there. So we're seeing a lot of the malls limiting the amount of people that can come into them. There's large queues to get into different shops. So it's still not a very desirable environment for consumers to spend time in malls. The leisure entertainment elements are down. So it's starting to bounce back, but it's still a long way to go to get back to normal.
At least there are incentives in place. I mean, I did see some write-ups about these stories of the Monday to Wednesday Eat Out to Help Out. And then people say, but it'll destroy the weekend traffic because nobody will want to go out on weekends anymore because they get a government subsidy to go out Monday, Tuesday, Wednesday. Some people are never satisfied. In South Africa, an environment you know very well, it's been brutalized by the lockdowns. It's been brutalized by the fear of COVID-19. And again, people very frightened to go into any kind of public space, particularly malls, which by their nature are enclosed and hemmed in. And if somebody sneezes on the other side, you want to get to the closest fire escape and get out. The South African environment taking a huge amount of pain.
100%. So at the peak of it, we saw footfall traffic in South African retail assets down around 60%, which is somewhat skewed. So if you look at the big retail centers, that was all but wiped out and hardly anyone going in, whereas the convenience centers still were doing okay. People still had to eat and go and get the non-discretionary goods at those stores. That's bounced back, and the figures now are suggesting it's down around 15 to 20% footfall. But again, the large retail formats are going to feel it the most because you just can't go back. The leisure and entertainment element is still largely closed down. as well as the fashion, where people are just not wanting to shop, but also the consumers under pressure. So there's just not going to be as much spend for discretionary related goods as there previously would have been. So a challenging environment for retail, no doubt.
Yeah, so you got on the one side, you got the landlords, the property owners.
Yeah.
They are trying their very best and discounting leases and trying to negotiate. On the other side, you've got the big tenants, the big companies, the big supermarket groups, the pharmacy groups, who've got lots of buying power and they can use their brute force in the negotiations. Then you've got the little guys, represented by Mr. Blumenthal, and he says, no, the landlords are all evil. These are the mafia. This is the way they behave, and they're not treating our guys seriously. The small guys are losing out. And ultimately, it's you and I who are losing out, because if we've got a pension fund and you're managing part of that pension fund, for argument's sake, as a fund manager, you want the landlords to provide you with some rental income. Thank you very much, to boost the portfolio. I need it for my pension one day. This very complex ecosystem is severely under pressure.
100%. And what we've kind of been trying to implore to all the companies that we invest in is that, yes, during lockdown it was a little bit of a gray area as to if the tenant should or shouldn't pay. Post-lockdown, they've got legal contracts, leases in place with the tenants, so the tenants should be paying rent. But there's no point in pulling every single cent out of every tenant, and then all the tenants go bankrupt and you have empty malls down the line. And so it's a balance to weigh this up to what can you afford, or what can the retailers afford to pay in terms of their obligations and the leases that they have towards the landlords, but that's still sustainable towards their own business model that would allow them to trade and be in business for hopefully when the economy comes back another day. So it started out with various discussions, and there were various industry groups, and they were trying to kind of go at each other quite heavily, and that didn't really work out so well. And so it became a little bit more kind of bilateral conversations between certain landlords and certain retailers, or groups of retailers in different segments. Now, if a retailer is trading and they're trading well, they should be paying. They shouldn't be using this as a scapegoat to get out. But agree, it's the small guys, it's the franchise operators, the small boutique stores who don't have big balance sheets. And this is an unprecedented event where they wouldn't have cash piles to be able to kind of withstand this, or they wouldn't have foreseen this in any of their budgeting and forecasting. And so there is some necessity from the landlords to be able to give these guys headroom so they can trade another day. And we've actually seen it to be okay so far. A lot of the companies we invest in, and when we chat to them, they've been reasonably lenient on the smaller guys. They're giving them some discounts, they're giving them deferred payment terms, they're moving towards rental models which are more linked to turnover, so it's affordable, depending on how the underlying tenant
So there is an element of creativity at play here. I mean, is there a market in the world, and I'm sure you look at a global portfolio of properties and options that South Africa could look to say, hold on a second, in the interests of reasonableness, if we were going to take this to a legal test, what is reasonable? The little guys are claiming absolute brutalization, calling the big guys bad names. The big guys are saying, look, we're doing all we can. We need to find a reasonable middle road here to make sure that by the time COVID-19 disappears, there is still a shopping center that still has tenants, and you and I still have an income from it in our pension funds one day.
100%. And retail's been impacted all over the world. Some governments have put some measures in to try and incentivize the retailers to stay open, or put certain measures in, as we discussed, the Eat Out to Help Out, to try and stimulate some demand in some of the, albeit in that end on the kind of leisure or entertainment side. But actually, in a lot of retail markets, the UK, the US, they're facing an even bigger threat from e-commerce, which has absolutely ballooned during this time. People who weren't previous users of e-commerce have just decided, or kind of been taken over to the other side, where they can see how easy it is. Things get delivered to your door very quickly, very efficiently, and you don't have to go into any of the retail setups. So that's really the bigger challenge for the retail landlords in places like UK and US. How do they fight against the e-commerce trend? And when do consumers actually want to come back into a public environment and start engaging with brands? Now, it's been proven that the best types of retailers are ones who've got omni-channel presence, because depending on what it is, consumers want to engage with the brand, they want to engage with the product, but they're happy to order online also. And so to create this omni-channel setup. So I think we're going to see strong evolution in how retail works, and therefore how the retail landlords have to think about their tenant mix, and how they charge rentals towards these different types of retailers.
Peter Clark, before the line disintegrates on us completely, thank you very much for joining us from London. Peter Clark is a portfolio manager specializing in the property sector. Thanks to my guests this evening for joining us. A contentious topic, contentious discussion, and some fairly serious and big allegations being made, particularly by small tenants to the big landlords. We'll watch the space in terms of potential legal action. Thank you very much for watching. Good night.